And then there's our friend Mike Wilson, Morgan Stanley's chief market strategist. He joins us now, who says a 20% correction seems more likely. What happened at 10%? You get a bad day and now you have to up it to 20?
Well, thanks, Scott. I mean, look, it's our base case is still 10%. And, look, a lot of the commentary I agree with that was just said on the show. I mean, you're not going to time these things perfectly. We're in a position to make these tactical calls, and we've had a view that the index is going to end the year at 4,000. Okay, I don't know when that's going to correct and we're going to end at 4,000, but I have high conviction that that's where we're going to end because that's what our process tells us. Now, we also try to make money within the market, right? There's never a time to sell everything. That's never been the call. And I think the most important thing to have gotten right this year, and what's going to be important to get right the rest of this year, is what do you own within the market? Okay. So obviously we had a huge cyclical rotation at the beginning of the year. At that point, we made the call that we're going to go through this mid-cycle transition, have a bit of a rolling correction. That played out. We made the quality bet, which is essentially the FANG stocks. That's the NASDAQ 100 and S&P 500. That's what those are. Those are the highest quality indices in the world. And then to Josh's point, when they get to those names eventually, you're getting closer to the end. We're down 5% intraday yesterday. Can we get another 5%? I think the answer is yes.
Why? We rallied off that, though. Doesn't that tell? What does it say, though, that we rallied off of the lowest level yesterday, and we are getting some level of a bounce today? That pattern is fairly true to form. Anytime we've had a pullback of substance, it's been bought. So why is this going to be different?
Well, I think the trend broke. Okay, so we did took out the 50-day moving average that everybody was telling me was never going to break, and it broke violently yesterday. I think you got to pay attention to that. I respect the market, and I would suggest other people respect the market. And the message in that, what that's saying, is that trend was challenged, and we have not regained that 50-day moving average yet. We'll see. It could happen. Okay, I'm just not rushing back in at the index level. That's not been our call for the last 6 months. We've been very focused on individual stocks and sectors. And that's why our portfolios are beating the S&P by 200 basis points this year. So, I'm comfortable with our call. I'm very comfortable that the market's going to end lower than here by the end of this year for a lot of different reasons that we discussed, whether it's decelerating growth, it's the Fed moving towards tapering. You can blame it on Evergrande. You can blame it on all kinds of things. It's not the point. The point is that the whole process suggests to us that the fair value of the market at the end of the year will be about 4,000.